Hello, hello. Good morning. Welcome to another ESP to trading stream. It has been a while since I did the last stream. Today is Monday, October 16th. It is 9:17 a.m. Eastern Time in the US. This is going to be a really quick market update. This market has been really weak in both sides. I have been hesitant and very careful at doing anything in any directions here because what's going on? I mean, there's nothing going on here. When we check, for example, I got here, what I did here, I put my monthly, weekly, and daily time frames up here. And this down here is or the bond market. Or is the bond market here. This is a 10-year notes. And on the right side, I have 30. We have a gap. Do we have a gap today? Yeah, this is a 30 minutes chart. Both them, these are daily, weekly, monthly, the ES, and this one is the bond market. And I'm doing this because the market is hyper fixated. It's pretty much being mirroring the action of the 10-year. I'm paying special attention to what the market does in the 10-year note. The market has opened with a gap. This is Friday, and there's a gap here. Let's see if the market can close this gap from Friday. Let's open it lower. The gap is even bigger than the 10 in the 30. Oh, come on. It's supposed to be you. Right? I will see if the market can close this gap, especially the 10. Especially the 10 year. Now, that being said, that's one thing that I am watching. The other thing is, we have here the monthly. It's clearly going lower. We are almost half into October, and the market has reached the halfback of the previous month. For the trend here to be over, this month, this bar has to take this high out. As long as this high doesn't take this one, the trend is to the downside in the monthly. There was a cessation of one time frame lower in the weekly. We have a range here, big range up here, another big one down here, and the market is right in between these two. I don't think it is coincidence. Oh, it is not coincidence the market has closed, right at the low of this range here. Getting inside this range actually targets this high. Is that possible? This is the ultimate destination of anything that comes back inside. But this is something, I'm not saying that the market is going to go to the opposite side, but there's something that I want to monitor if it goes here. Because we have a downside trend here, 1, 2, 3, 4 weeks going to the downside, and the past week has ended that. This could be some rebalancing of these shorts before the market continues its way down, or it can be some sideways trading until the market picks a direction. This is the weekly time frame. In the daily, you will see something really interesting here. Notice these things here. I want to do this. Notice this high here and this low here. All right, we have this range here. It's 15, 17 day range here. As you can see, the 4350, which is this level, the low of this range, is a relevant number for the market. It has closed that right there at 43.50 the last week. It's pretty much at the center of the range. And what I want to point out is, what I want to point is the high here. We got 1, 2, 3, 4, 3, even 4 highs here at the same level. But there's no excess here on the upper side. Let's check the low. What's in the low? The same thing, 1, 2, 3, 4 lows here. No excess in the lower side. You know, this is the action to the upside has not been completed. The action to the downside has not been completed. We have a gap here at the top of this range, the 17 range. We have a gap below this. You know, it's the market is very uncertain here. The market can have a big rally. The market can have a big break. Or you can also try sideways here. You just can start building value here, and after value has been built, the market picks a direction, right? Has a direction and move after that. When we take that and take something else, if you've been following Jim Dalton, you will see something. Let me load my, okay. This is my 50 moving average. This is the 100, and this is the 200 here. But there is something else that you can do here. This is single swing, okay? We can adjust for contrast changes here. When we do that, you know, we have the 200 right at yesterday's or Friday's low. And this is very bad. I know, it can be very bad for anything going to the upside here. Coming exactly from this number here. No, usually there is something that doesn't happen. Or it's a sign that whoever's buying here market has a rally here, it can retrace, maybe come back below this moving average a little bit, and then and then go back up to the upside. That will be a better movement. This is not a good level also for any selling, right? So the thing I'm trying to say here is anything that's happening here, there's nothing certain here. There's a lot of uncertainty. We have this Israel war on top of the Ukrainian war. Now we have Taiwan. We may have Taiwan as well. There's a lot of things that are going on here. And something that markets hate, markets don't like is uncertainty. And we don't know. On top of that, we have these high rates, high interest rates that are going on, which are unlikely to go down anytime soon. The odds that they are going to stay higher for longer are increasing actually, right? Look at what's happening with the bond market now. Market is going low, right? It's going back low. These charts don't have the overnight session. I'm going to save this thing because I want to save this. Okay, that's one thing. The other thing is we have this week lot going on here. We have earnings, Tesla next week on Wednesday after market close. Also, you know, I am impressed with the amount of speakers that are scheduled to, you know, to speak. Right, this week we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, that includes Chairman Powell on Thursday, which I think is very important. This one, but I never seen such a. You know, I guess all the speakers are. You know, 12 is a really a good number. Something that the more they come, the more they are trying to calm, to easy the markets, right? Also, something important, very important, we had the beige book on Wednesday, 2 p.m., and retail sales tomorrow at 8:30. I think this number is going to be important as well. And I'm going to be monitoring that too. Earning session is already here. The volume, something also very interesting that happened last week was the volume. Let me see if I can show that. Let me see if I can show. Okay, here it is. Look at the amount of volume. You know, I don't remember seeing this amount of volume. In the day that has high volatility, has really 43, 40, 43, that's 70 points range. Let me see this amount of volume here. Accumulated volume 60,000, almost 70. Did I see 70? No, 60, 50,000. That's not usual. There's a lot of volume in the ES, which means that somebody that could be the market can be getting nervous. Some hedge might be going on here. That hedging is going on. Look at this, 30. I remember the 29th, which was the end of the month. What is 29? Was one of the biggest ones. And the market finally take this range out because this has a lot as well. This 40, 14, 10 for me is high. The accumulated is high for one period, one period. But we have 30, you know, consider 20s here, 10s here, really high volume throughout the profile. And once the market took that month out, my bad, no, was the next day after the market closed, but it was a Monday after September. And you got high here, 30s, 20s, and high down here as well. And the market finally reached that one, take this one out, and now we see the center of this 17-day range, pretty much at the center. Notice how the overnight inventory is 100% long. 100% long. It opened high. It is having the same opening as it had last week. And exactly, it has a settle was down here, last was down here, really big gap opening on Sunday. And now we are up high. What I'm watching right now, when the market is open, what I'm watching now is this distribution. The market has two distributions. Look at this nuance here. Look at this C here. Right? What the market does with this distribution? Can the market, the uncertainty continues here because we have a distribution in the overnight. Now, what happens if this distribution close? It can go all the way down to here. And this is distribution in the lower side, another distribution in the upper side. I'm talking now about trading, about a very, very, very short time frame. I talked before about the bigger time frames, kind of like the place where the market is at right now. And then I keep zooming in, right? That's what I do. I zoom in, keep zooming in, right? Until I got today. When the market opens inside previous day range, the odds are that we're going to have chop. The odds of chop are high, are implicit. The closer to the center, the higher the odds of rotation and chop. And where the market is right now is that very close to the center. The exception is when the market single print is way out of the range. Let's see, we have A, the market comes out, it just rallies, take this high out, boom, we are outside this range. Now that's what I say, that would be a sign of market, a strong market. The same goes to the opposite side, right? This would be a really weak market. But what happened here now is we have this the 4400 right there. You have this weak, extremely up, weak highs here. From this day, I believe I don't remember what day it was. One overnight, I think it was Friday or Thursday. I don't remember, but there was a huge amount of volume here. Right? There was the overnight. Not my bad. After the market closed, just before, after the closing, just before the end of the day, which means after 4 p.m. and just before 5 p.m. That's a huge amount, huge blocks here. What I thought at the moment is that this market has something there. And when I see something like that, there's somebody holding the market. There can be somebody holding the market or positioning for something there, right? And if you can see that, it's somebody that has huge power, buying power, because these were on the 10,000s, blocks of 10,000 contracts. If somebody that has that amount of power, let me see what they're doing, then I don't want to see it, right? I actually don't know what that is. One thing that can be that some because the market was going higher. Let's see if this is the day. No, this is not. It was this day there. Or this one. Boy, I don't remember which one was it. But it was one of these days here. I'll need to see. Let's check the overnights. Okay. Maybe I can see it here. Yeah, this day here. Can you see? But it wasn't this, not this, but this one. Unbelievable. I didn't get that. Right. It was this day. Yeah. Notice this was the, let me expand this profile here. This is the closing. This is 4 p.m. This is 4:30 p.m. and this is 6. Here in B period. In B period we have this huge amount of blocks, right? Who does that? That was my question. When the market is going higher, yeah, this could be somebody, trying to close positions. The shorts that were trapped here, and they were just buying here, holding the market higher. And now that position doesn't play right away. This is just one scenario, right? One possibility, because I don't know actually what's happening. Keep that in mind. I don't know what's happening. But that's one thing, right? Why I talk like that is because I see something like that happen before. The movement actually doesn't happen right away. The market can brace, keeps going lower to some key levels, and then it comes back, takes those big blocks out, has a huge movement, and that's it. It's over, right? But this is the information that I am carrying on. Right? These big blocks here. Notice how this day has an overnight prominent POC, and remember the 17-day range. There's another overnight here, which had, oh boy, and it's not here, which has a prominent POC as well. What the heck? Let me see if I can see it. Let me pull that one out. Oh yeah. No, my bad. It has been taken. This one has been taken during this trading day. This is just a low. It doesn't matter. This is the one. No? This one. It's not at the low of the 17-day range, but below this we have prominent POC here, very prominent POC down here. Okay, 1, 2, 3, 4. No way, 5 days here. this month, this week. Let me take those ones out. You can see I'm not interested in doing anything. I don't have too much interest. There's a lot of people, there's a lot of traders that keep trading here that have made a lot of trades now. They were selling, buying, There's a movement that I can see here, is going to the upside, that can be this, what is, or what can be potential destination of this movement could be this one here. We have the 4400, some selling can come or from the 4400. We got a very prominent POC, very prominent POCs tend to attract the market. This Friday high is not the previous Friday, but was the week before. That's not relevant anymore. At least for me, 1, 2, 3, 4, 5. No, actually it was wrong. It was this high. And what else? I have here a weak level. What the heck is this? Oh, okay. This was halfback. M rally right to halfback. This has been corrected. Market opened way up high. This has been corrected. It's not a. Notice the overnight here. When I opened my chart kind of like midnight last night, I saw this low here exactly a settle. This market is coming back to check that one. That's what I thought. It could be, and the market was up here, I believe. I don't know what it was. 7, 8, 9, 10. Yeah, it was somewhere in here. This could be, the market was, what I was expecting or wishing for was a market opening what it opened now, but without the overnight taking this low out. That was when that happened. There are good also markets coming to recheck this level. Now, but right now, again, this is a 2-day, 2 distributions. The market has closed the distribution, which is a sign of something. First, the market has, the downside movement is not that serious, right? If the market closes this distribution, that's not a good sign for me, for the downside. Because if there's something serious to the downside, value would have keep building around this area, in this area, and the distribution would have been kept open. I'm not saying the market cannot go lower. I'm not saying that. I hope you can picture. If I don't explain myself well, that's a sign as well. It's a sign that I don't know as much as I think I know. All right? Okay, let's check where this low is. No? Did you see? Can you see this? Can you see where today's low is? It's this low here. I don't pay too much attention to this thing, but the fact that it was bottom right from this low, we have this distribution from the overnight. Yeah, man, that doesn't give me too much. That one, this piece of information on top of yesterday, on top of Fridays, on top of the market opening inside previous range. Can you see there's information getting accumulated here? It's telling me, okay, just let the market settle. I was reading some tweets somebody posted there. They trade, one of the rules is that they trade between 9:30 and 10:30 or 11, something like that. That's the only time they trade. I say, well, who can do that? Because that's the opening. It's very hard to have success if I trade openings. If somebody trades just the open, because that's at least for me, right? I let the market settle. My time frame, I check the 30 minutes periods. And I need to have patience here. You know, for these periods to develop, for the market to develop, for the market to accumulate inventory in the upper side, lower side, inside, at the center, you know, it needs time. It needs time. There are some times that we have continuation on the previous day session, that the decision can be made early in the morning, but most of the time it doesn't happen like that, right? Everything has to be seen in context. That's very important here. Now the market is coming to check this low again. Look at this. Let's check at this. You know, this is the opening. This is the opening. Market made a stop here, was bought. Now it's selling. Man. Everything that we do is relative to something. Okay. Do you see where the market was bought? Huh? It bought from the opening, comes back a little bit lower, and then and that's my reference. That's my reference. If I see a market doing that, trading or paying a lot of attention to these references, it's a sign as well. It's a sign that who is doing the trade. If there is some serious selling, for example, some serious buying, they don't care. They don't know when the market open. I have a position to fill. I have a customer, I have a client who has millions or billions of dollars to allocate, and I don't care where the opening is. I don't know where the opening is. I don't know where this low is. Right? I don't know where this POC is. I have just to buy. Those are different kind of participants. The market participants. There's different kind of money, different kind of traders. I would say, based on that information, that this is not, or there are not. This market has not too much of those players here at this moment. And everything can change at any given moment. That's why I think also that setups doesn't work, because we never know who's doing the trade. It may work under certain circumstances, but just putting without putting things in context, the odds that we have some success are diminished, are very low. Dum, 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 dum. There is low open. If you check your bond market, look at what the bond market is doing. It's going lower. And the ES is at the center, right? The ES is at the center. I mean, in the intraday, that's what I mean. The market has closed these distributions, which targets the opposite side. The opposite side happens to have the 4400 really close. Remember, 200, the adjusted 200 moving average is right here, right at Friday's low. We also have this low of the range. Remember the daily or the weekly time frame. Yeah, this low, this is 4350. This is it, 15 days range low. Last settle, half back. What the heck is this? Half back plus this. Okay, this is okay. This is something else. Friday was bought from half back of this day. Yeah, this is something I was missing today. it closed this distribution on Friday, which actually targets the opposite side. But notice how far the market has moved from the opening or from the high this day to close this distribution, right? It may have exhausted the fuel or for the downside movement, and there's some buying that came around here. But this buying is very weak, by coming from halfback, coming from the 200, and because it closes this distribution, the same thing that's happening here, it's closing the distribution, which targets the upside. This is closing the distributions of this day. I don't know what day is this. This is Tuesday, I believe. Tuesday last week, Monday last week. Oh, Monday last week. 1, 2, 3, 4. Yeah, Monday last week. When we had this high, really high opening, settled is way down here, losses down here. All of these shorts are now underwater. The same thing happened, all these shorts. The same thing happened on Monday as well. Another thing that I just remember, I was playing this, I played the replay last night of this day. There was a mini 45 forming here. You can see POC here. So what the market does. What the market does is keep selling, and the fact that it sells is not what is important. Here, sells from this area. The relevant piece of information is the market comes back to what is POC, right? But all comes to be POC. It comes back to POC. This is shorts. Trade is shorting a very short market, or what Jim calls trade is shorting in the hole here. All these shorts now are trapped. All these shorts are trapped. What happened if these shorts are forced to cover? We will have a rally today if that happens. What happened here was a liquidation of these longs here. Can you see? The same thing, the same profile that we have on Friday, we had on Thursday before. No, my bad. There's just two distributions. It opened up, way up here. But we can see here on Friday, we have this is a B formation. It doesn't matter when we talk about B shapes or P shapes, it's not the shape itself, but how it's made. Also, the 45-degree line trade is not the line itself, like it here, but how it's made. In this case, the market was selling and coming back, selling and coming back, selling and coming back. Let's check this out. Can you see? Sales come back, sales come back, sales come back, sales come back. Right. It is not perfect. I don't think this is a good example of that. Right? But what I could see here is the market selling, trying to go lower. I'm not saying that there's going to be a short covering today. I guess the odds are decreasing now, because when that happens, it happens right away. And now, right away after the opening. Okay? But this is long liquidation. Long liquidation actually strengthens the market. Huh? Because what happens here is longs. This is longs getting out of the market. Closing positions. There's no new selling. How else do we check that? Volume. Because the volume is lower. Was lower on Friday. Today it seems that we're going to have really low volume as well. Let's see. If this one comes up here, it's going to be, at the end of the day, it can be as low as Friday or even lower. The bulk of the volume of the first period comes in the first 10 minutes, maybe 15. It tends to decrease in the second half of the period, in the second half of the first period. We say that this low is not good. The bond market is breaking, man. That's why. Okay, there's something else I need to check in the bond market. We have a gap here today, but also look at this. Is this a gap? Look at this piece of information here. What? Look at this. We had a gap in this day, which, can you see this gap here from here to here? And that gap was closed. But close here. This buying is weak buying coming from this exact same level. And now the market is coming back to replay. Now this is very weak low. God, this is very weak low here. Look at this as well in both markets. I'm paying more attention to the 10. Yeah, this is not good. Now this can break. It may find some support around this area. But if this happens, what I was observing is that the ES was anticipating the last week. The past week was anticipating the movement in this market. May find some support if it takes this level out. It may find some support down here. But right now, what I'm seeing here is a break, no good high here. The gap remains, but there is unfinished action here. What I mean with that? Look at this highs, matching highs here. Is this coming from Halbach? It seems like it's coming from Halbach as well. Was bought from this. Notice what it was bought for. A little bit, It didn't take this one. There can be a bounce here. Let's see what happens here. It didn't take this low. But what this action does is weakens this level here, because this level is not good. Here it closed the distributions. It closed the gap actually. I can see better now. It closed the gap, which targets the opposite side. Is the opposite? Okay, and the opposite side is the low. There's not too much excess here. All right, I guess I am watching too close here. Let's see what the market does here. Overall, there is just a lot of rotation here, a lot of chop here. Odds of rotation are really high today. Volume is accumulating at the center. Merely weak upper side here. This level is extremely weak, and there is nothing here all the way up to the 44, 46. There's nothing here. This is a gap, and there's a bunch of references. These references are not the distance or the destinations of the market. The references in the lower side are levels that we use to monitor the market, to monitor your trade, for example. Let's see, for example. Let's say I got a long, or I got a short, just for a second, and then because of this or that, because I have my reasons to go short, for example, right? Or I have my reasons to go long. If I'm going long, what do I use to monitor the market? Okay, well, I can use this level, for example. This is an eyesore here. If the market takes this level out, okay, there's some continuation. Huh? My trade is working. It may have potential. What can be the ultimate destination of the trade? This high, right? This high, because it's very weak on the upper side. But the money, before getting over there, I have for the market count needs to go through the 4,400. And this level is my reference to monitor the trade. If the market sells very close from this level or exactly from this level, Okay, there could be some odds the market can keep going higher, right? But I need to see the context of how the market is trading. Does it have conviction? It is going back and forth, back and forth. It is struggling. What is doing? All those things I have to have in consideration to monitor the trade. If the market is really having hard times going through this level, for example, okay, then my trade may not work. Right? But there must be time to hedge, to close, to trim, or whatever, but do something. Same goes to the lower side. I have more reference in the lower side. If something happens to the lower side, I can see this distribution doesn't work anymore. This is not a reference anymore. I can see half back, value area high, overnight half back, overnight POC, Friday's POC, sell, last, overnight low. There's a bunch of references that I can use to see, to monitor what the market is doing. Right? In my trade, because the potential, if there's a downside movement, if there's a downside, this is just an hypothetical. No? This is hypothetical, remember that. Okay? The ultimate destination, what can be in the lower side? The ultimate destination, actually, maybe the 13-month range high. This could be something, because this is another time frame. Another kind of trade, another kind of traders, another kind of money in here. I also have no taper low this day. When this low has no taper, which I mean with that is, notice for example here, this accumulation. There's a big volume here, and then when the market goes lower, volume decreases, right? Decreases relative to what? Relative to this volume. Remember, everything is relative to something. What happened in the upper side? Okay, I can see that this low is lower than this upper side. Right? So the upper side or the lower side here is better than the upper side in this period. Now, if I'm going to use that for the whole day, that's another story. Because there could be accumulation, bigger accumulation as happened here, as happened on Friday. Oh, and speaking of that, I did not highlight. Let me see where it is. This is really big. I'm going to use stories from 59 to 53.50. 59, 53. Where's 53.50 here? 53 here to 59. Okay, this is high volume here. Now there's a bunch of really, really high volume as well. From the 73 to the 51.50. Where's 73? From here, 51.50 to the last. All this area here has really high volume. So, for today, if the market, okay, I have one distribution here. There's a lot of volume here. This could be shorts. The potential for an upside movement is really high here, right? If it happens, it can have speed, because it could be short covering. Short covering can become emotional really fast. If the market comes, now I'm watching this market different. If the market comes back inside here and keeps going lower, and it can gain momentum, there's a lot of volume here. There's a lot of volume here that can be taken out and can actually be a fuel for a downside movement. As long as the market doesn't take this one, I think I am safe in consider still not taking the upside movement, not ditching the upside movement yet. As long as this area is not, the market doesn't trade inside. Now, if I'm going to monitor a trade Here I have the market coming back first inside this range that I just highlighted. The closer it gets to this, the higher the risk will be for potential, because there could be this, the bulk of the volume is in this area here, right here. There's a lot of volume. This market is super long. Big longs here from the overnight. No, man, I don't have any. I am very neutral here. I'm just waiting, watching, and waiting. The bond, I don't like the bond market. The bond market is going lower. They have a gap. It has a weak low. There was an attempt, I believe was on Thursday or Friday, when there was a bifurcation between the bond market and the ES, because the market was breaking hard and the ES was going higher. Okay, that was something interesting to see. But at the closing, the market just matched, did what it had to do, and it was the market, the ES who reached it, who break, and not the bond market that rallied. Something else that I just remember, that that there was a correction, is the gold, because when this market goes lower, it was weird also. The gold going lower. Come on, that was weird. But the market now, the gold is having a big rally here. It has found. I thought the market was going to find support maybe down here, but no, man. It just retraced this. It didn't take these lows here. This is absolutely weak here. This movement is just adding weakness to. Well, I mean, this one has been corrected. It's doing the same. It's reinstating the same weakness here. Notice this B shape. Markets don't trade in B shapes. Markets don't do that. But this movement is more in line with what the bond market, the ES, the dollar are doing. It's kind of like there was a divergence there. Now there's no more. Oh, come on! Oh boy! Oh boy! What I have done there? I double click. That's what I don't like. I don't like to have two windows open in the same screen. I will leave this one here. So you are I bring anything to this screen. When I close, I won't. When I double click, I won't close. I will not close my screen. So what I was saying, 59 to 53.50. This is not a reference anymore. What else? This one is not. What else? 53.50, 59, 53.50, 59. I got one. The other one, 73. Where's 73? Where are you? 73 to 51.50. Wow, 59.50 is last. Okay. I have the overnight. I don't want this week, just last night. Notice where the market is, inside. The closer the market opens to the center, the higher the odds of chop. Right? Opening inside previous day range, advertise, rotation as well. The closer to the center, the higher the other chop. Opening inside previous day's range, increases of having a rotational market, which is what we are having. We are not having that right now. We don't know yet, but there's a lot of chop. Market is going higher here. 1, 2 is going lower in this trend today. 1 to 3 days going lower. But in here, we have an inside bar here, no directional move yet. No, I can say the market is going lower. I can say the market is going higher. I don't know. There's nothing here. Nothing. You know, seeing that is also something very important. Having the, you know, having the ability to remain, you know, to constrain. No, and just watch, observe. What happens is a lot of traders have a time, having schedule. I'm going to trade from 12 to 1. I'm going to trade the power hour. You know, I'm not going to trade during lunch because everybody is lunching and there's nothing going on. You know, stuff like that. I had to watch. For me, it's just the odds of having anything from that are really low. I work in construction. I used to work in construction. I have a small remodeling company. For example, in painting, when I have friends who do paint, contractors who do paint job, most of the job, and this goes to everything. Most of the job is made in the preparation. The bulk of the time, the bulk of the effort is preparation of the house, preparing your job site, you know, getting ready to paint. That actually is the job. The execution, you know, the painting itself, it is way faster. It is just 1/4, less than 1/4 of the time of the total project. Same goes with performing activities. You have sports, actors, you know, whatever you just call it. Most of the time is preparation, and the execution, in this case, the execution doesn't take much. We can be watching hours, days, weeks, and the execution is really really short times. It can be really short. In this day, I don't remember which day it was, but I guess it was here. You know, but the market was coming from, I don't remember. I don't know what was this, the market was going higher. You know, there was something like 9, 10 days observing the market, just watching the market, and then boom, it just happened. We don't know when it's going to happen, but if we don't see it develop, you know, being present in the market, we are going to miss it. The odds that I'm going to catch this moment are lower. I am going to be aware, the market is breaking when it is already happening. You know, when it's gaining momentum, when everybody's piling. And usually that's the part when the trade is becoming risky. You know. Let me see if I can find some example here. Here, for example, no? To be aware of this movement, you have to watch this. You have to be present these days. See what happened here. What happened here, and inside there. We are now having an inside bar. This is an inside day. Right? This is a daily time frame, not an intraday. It's a daily time frame. So the odds here is, you know, what are the guidelines? Go with the breakout of the or go with the breakout on the inside bar. This is an inside day. There's a breakout here to the upside, but the breakout fails, and there's a lot of inventory here from these days. You know, look at this day, for example. Right? I guess this was ADP or something like that, FOMC. I don't remember. This was the Hamas, Israel attacking Israel here in this day, and look at this, man. There's extremely emotional market here and here and here. And if you have missed these days, the odds that you are aware what is happening here are low, because this is a breakout of this inside day that fails to take the 2-day balance. It fails to take this 2 balance, and then it travels to the opposite side of the range, of this 2-day range. And that's the trade. By the time most traders are aware of this, the market is down here. Now this could be one entry here, potentially when the market takes this low, and the destination being the opposite side. This could be another entry here, with the destination being this side, because we have a directional move now, failing to take the upper side of this 2-day range. The potential of the ultimate destination is the opposite side of the range. But that's just one piece of information. You have to be present in the market and see tempo, see pace, see the conviction of the market, right? In the movement. There was inventory here long, for example, right? It happened 1, 2, 3, 4 hours before this happens. And the same thing can go here as well, every day. I may need to be in front of my desk for hours, 3, 4, 5, 6, and that's the job. That's the job. And people don't like that. People say, oh boy, I don't like them. I hate to be in front of the screen when nothing is happening. Right? Guess what? That's the job. Right? That's the most important part of the job. That's what gets you ready to do what comes after that. If we don't have time, if we don't have that time, we have to be aware of that situation, right? We have to be aware of the situation, what can happen to us, so we can increase our odds. But most traders don't realize that. They just sign for alerts. When the market is doing something, the market is breaking, the market is taking the 20, the 5 moving average, double lows, triple highs, or whatever, right? All right, enough. I think the market is not doing nothing right now. We have the 4,400. I think the market has seen the 4,400 here. I am aware of the tremendous amount of volume this market has on the lower side. The lack of excess in the upper side. This is exponentially weak. We have one. Notice this. Look at this. Look what we have in the upper side. You got 1, 2, 3 highs together. That's one thing. On top of that, we have no excess here. The action to the upside has not been completed. No excess here. All right? So this is very, very, very weak here. Poor and weak twice. Very, very weak here. And what do we have above this level? We have nothing. There's no resistance here. The market, if the market takes this highs out, can go all the way up to here. In the same way how it was bought from this half back here, it can be sold from this half back up here. I'm not saying that's going to happen, right? But those are the things that we need to think, or we need to be aware for, for when something happens. If there is something going on, something starts to happen, in some direction, a move starts. Okay, what this market is doing, all right? What this market can be doing, or what this market can be trying to do. Those are the things we do while we watch. Start to think, playing with imagination, start thinking scenarios, and being aware of that is important. And by doing that, also another thing that happens is we get away of price. We get away of price to just watching. Remember, look at I didn't talk about price in any moment, right? But most traders are just hyper focused on this, very watching the market very close here, very close. What the market is doing here? What the market is doing? It's going higher, higher. Let's go higher, right? And then they miss context. Right? The longer you trade, you will have the odds that you have the mental picture of what's going on here increases. So when you are watching this close, you have in the background of your mind that picture, okay? But it requires time. It needs time. You need to build that habit. We need to build that habit. That's, for example, we were talking about continuation, huh? What the market is right now. What the market can be going. We talk about this particular, I guess I call that like this is an eyesore, right? God damn, what is this, right? Right? The market has come to this level. I'm not saying that I say that because I have no plans to do anything in this market. After the market opened here, the volume is lower. I'm checking my volume, my composite bars. Volume is about same, a little bit lower, right? And I have no intentions to play anything here. We talk about how this low was better than the upper side. Remember taper? When we talk about taper here, but being aware of that or noticing that those things doesn't mean I'm going to go long. I'm going to go short. I don't see anything here. No? I saw the market didn't even get inside this area, so this could be shorts here. Can be now they can be starting to cover, right? If the market takes the 4400, it takes this 4400 out. The next thing to monitor for continuation this high and having this volume in mind. Well, there's a lot of shorts here that were shorting the market, shorting in the whole on Friday. Now I'm starting to think. Right? But I don't have any reference here, any label that I can use, for location. Location is very important. Okay, if I go long here, for example, what would be where do I place my stop? What the market needs to do? How the market will tell me that I am wrong? How I will know I am wrong? You know what? I am wrong. What do I have here? For example, what do I have here? This low maybe on C. When C happens, the market gets closer to B low, but that distance is very long. You have how many points there? You have 14 points for the market to prove me wrong, or for me to know I am wrong. The market, I will be 14 points lower. Right? The market will be 14 points against me for the time, or by the time I know I am wrong. So I don't have location here. This could have been something in hindsight, right? This could have been something here. How do we know you're wrong when the market closes this distribution? Okay, I'm out, right? Here, in B maybe, but being inside previous day range, that's what it's telling. No, most of the times, the trader is, as I say, is doing nothing. It's just watching, observing, most of the time. There's nothing glamorous on trading. The trading is not that activity when you are moving back and forth, doing a lot of things, doing a lot of trades. It's not like that. Trading is very boring. Very boring, actually. All right, guys. If you have any question, please just let me know. Otherwise, I think I'm going to call it a day. I hope I can see you another day. I wish you a really good rest of the day. Stay safe out there. Bye bye.